You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It's 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together, shall we? It is time for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which all of you folks are mainlining these days. Hope you're having a good trading week. Another interesting one on the docket. Of course, if you want to check out all that fun and, of course, a lot more, theoptionsinsider.com/pro is the place to go. I'll let you join us live. Congrats to our pro member who took home the pro trading crate earlier this week, Mr. Quip, I believe it was. So congrats to all of you. If you want to get your name in the hat for December, theoptionsinsider.com/pro is the place to go as we go around the horn, see who's joining us on the CME Group hot seat this week. Pleased to welcome back our old pal, Mr. Dan, the man, Gramza, from Gramza Capital Management. Mr. Dan, welcome back to TWIFO. How was your turkey day, sir?
Thank you very much. It was excellent. Always great to be with friends and family, and it was a wonderful day. Just very relaxing, very nice.
Speaking of turkey day, sir, I have to get your thoughts on the hot question of the day. We asked our audience last week, cranberry sauce. Is it a topping or is it an actual side dish? Our audience could not make up their minds. They went out exactly 50-50, not 50.01 to 40, but exactly 50-50. And we've had a lot of guests and co-hosts on the network this week. They're all pretty much split as well, sir. So I put it to you. What is cranberry sauce? Is it a side dish or is it a topping, sir?
Oh, man, because you use it both ways. I grew up with it as a side dish. My mom would make it with fresh cranberries and nuts and pineapple. It was absolutely wonderful.
I think nuts might qualify it as a side dish. There's a little bit more in there then.
She put some walnuts in there.
All
it
right.
was back and grind them up, and she'd mash the cranberries and the whole thing. But that was really, side dish.
I got to try the Gramza family cranberry sauce. I guess I've been suffering on this ocean spray crap for too long.
But I'm used to that too, though. That's not bad, actually. So I guess I'm leaning towards a side dish, although I think the way it's used now is more of a topping. Little piece of turkey, a little bit of cranberry sauce.
There we go. Dan might be the ultimate word. We shall see, listeners, as we keep on rolling into a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everyone, welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. And speaking of the aforementioned Turkey Day, we were, of course, off last week, so we have 2 weeks worth of data to crunch here, listeners. If you look at the Movers and Shakers chart for 2 weeks, you'll see that most things are pretty heavily biased to the green, listeners. I'd say they're about 80-20 green over red, including our largest percentage mover by far over the last 2 weeks since our last show is to the green. Can you guess what it is? You probably can if you think about it. And then if we just go to 1 week, listeners, it's much more of a mixed bag. We've had a little bit more red percolate in over the past week, so I'd say we're pretty close to 50-50, maybe 55-45 green over red, with the largest percentage mover coming on the red side in 1 week. So Dan, you are our guest. I will give you the choice, sir. Do you want to go back 2 weeks? Do you want to go back 1 week? Do you want to do both? What spirit compels you today, sir?
Well, I'd say why not do both? And we can kind of see how things have changed.
All right, that's just more talking for you. I didn't want to volunteer you for it, sir. So you dove into it. You only have yourself to blame, sir. Have at it.
Well, when we look at the light side here, if we start with that, feeder cattle, number 5, up 7.18%. Number 4, Bitcoin, up 9.08%. And that was number 1 to the dark side 2 weeks ago. And if you look at number 3, that's platinum, plus 9.29%. Number 2, nat gas, up 10.72%. A very interesting market. And number 1 to the light side was silver, and that's up 14.05%. That's also an interesting one in its relationship to the precious metals. If we go to the dark side, well, we have number 5, RBOB. So that was down 2.73%, which is unleaded gasoline that we're looking at there. Number 4, rough rice, down 3.16%. Number 3, oats, down 3.76%. Heating oil, down 6.12%. And that was number 3 to the light side 2 weeks ago at being up 2.54%. And then number 1 to the dark side was class 3 milk. That was down 6.35%.
Well
So
done,
an
sir.
interesting mix.
Yeah, well done. That's just for 2 weeks. I mean, that silver number kind of leaps off the charts. I think we'll have to come back to that a little bit later in the show, Mr.
Yeah,
Dan.
I agree.
But before we get there, how about you break down the 1 week we can compare and contrast for our listeners, sir?
All righty. Well, to the light side, let's start there. Number 5, copper, up 2.07%. Number 4, WTI crude oil, up 2.20%. Number 3, live cattle, up 2.82%. And number 2, feeder cattle, up 4.05%. And that was number 5 to the light side 2 weeks ago at being up 1.09%. And then number 1 to the light side, nat gas, up 4.54%. So very interesting. And that is an interesting market. You know, you think about silver, you mentioned that one. Nat gas is another one that's really dynamically changed. If we look at dark side, we have soybean meal down 1.65%. And that was number 4 to the dark side 2 weeks ago, or to the, dark side 2 weeks ago at minus 4.38%. Number 4, healthcare was down 2.42%. Number 3, RBOB again, that was down 3.43%. So gasoline costs are coming down. And number 2, utilities, that was down 3.44%. Number 1 was class 3 milk. That was down 6.51%. So interesting mix, huh, Mark?
Well done, Mr. Dan. You're going to regret you're never going to come on after a holiday again, sir. That's a lot of talking you just volunteered yourself for. So I will spell you. By the way, Dan, you seem to have swayed some of our chat with your talk of cranberry sauce with nuts. Folks are saying that changes the game. That makes it more of a relevant kind of side dish now when you add a few nuts to the game. When it's just cranberries, it's not really a side dish. So, Dan, you may have thrown all of our data into array now because of that suggestion.
But though, if you guys could have had my mom's cranberry, I guess, I don't know if you call it a sauce, because she put it through a grinder. I mean, it was really a very manual thing that she did with a little pineapple for sweetness.
Pineapple, man. Now you're going crazy. Now you got a whole dessert going. Forget about a side dish or a topping.
But though, I think you're onto something, and so is the audience, that those nuts in there, those walnuts, may have tipped it to a side dish.
All right.
So that format, yes. The smooth jelly kind, that would be a topping. So I think, Mark, we have to make a distinction between which one we're talking about.
We'll have to say, is it Gramza style cranberry sauce? In which case, it is definitely I vote for a side dish on that as well. If it's regular out of a can ocean spray, that's more of a topping.
Yeah, I think now that we're talking about it, I lean that way
There
too.
we go. Gramza style, and next year's poll, Dan, we'll have to put that.
Right.
We'll have to have a third option. Gramza style. Yes or no?
Yeah.
All right, Dan, I will spell you for a moment, allow you to catch your breath as I dive on into the CVOL movers and shakers. Remember, you folks can run these reports for yourselves. All this data we give you on this show, it's an embarrassment of riches. Just type CME and CVOL, CVOL, into whatever browser you're running. That'll get you to the CVOL dashboard. They will ask you to log into your CME account. Takes 2 seconds. It's free. And then you get all this data, including our TWIFO reports. So you probably should have one by now. And if you run that, set it to, we're going to go back just 1 week to make things easy, listeners here. If you do that, listeners, you'd see at the top of our list a rare appearance for FX, 6.46. You hear that number, you can see why FX doesn't normally come in hot and spicy on our list. But it's coming in a wee bit this week, kind of unched today. The high was 6.68, so may not sound like a huge move, 6.68 to the low right now of 6.46, but when you're starting at a baseline of about 6.68, it's actually a pretty big move. So FX vol coming back to earth a little bit. In fact, this is a rare exception that I can remember since we've been doing this show, where every single CVOL is pinning the needle to the downside as of showtime right now. So I guess you could say they're coming for vol this week, listeners. Treasury vol below it, the price vol, we're at about 4.54. That's off 0.8. That is the low print for the week. The high was 4 3/4. So once again, right to the downside for Treasury price vol. Metals vol, 24.72. That's off 0.18 today. That is also the low print for the week. The high, 26.56. So nearly 2 points to the dark side for metals CVOL this week. Ags coming in below that, 18.94, off 0.52 just today. The Ags are the lone exception. If you look at the dashboard, listeners, you'll see the trend lines there. Every single day since last Thursday has been red for the Ags. So they're coming for Ags vol right now. That is, of course, the low level for the week. The high, 20.24. Below we have the aggregate commodities CVOL, 36.88, off 0.53. Just today, that is the low print for the week. The high, 38.93. So coming in over 2 points on the commodities CVOL. Energy vol, are they coming back to earth? The answer is yes. 57.31 right now, listeners, off nearly 0.8 points just today. That is the low print for the week. The high, 60.62. So coming off over 3.3 points in energy CVOL. And at the bottom of our list, the Treasury yield vol, the actual volatility of the yield on the treasuries, which we all know is a pretty spicy number, but that's coming back to earth a little bit this week as well. 0.83. That's off about 1.6 points just today. That is the low print for the week. The high 86.22. So if you need a tail of the tape for CVOL this week, it is getting shellacked, listeners. But you know what's not getting shellacked? It's silver. So let's kick things off in the metals first.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. You know where to go to find these. CMEgroup.com/TWIFO, TWIFO, is the place to go to kick the tires and light the fires. Once you're there, listeners, you're going to go in that asset class drop down, go all the way to the bottom of the list to metals. Then we're going to go product family to precious. We're going to skip past gold for now. Going to go down 2 slots to silver because it is undeniable. We were just talking about it on the futures rundown with Carly yesterday. It is the best performing asset for the year that we track now on that show. So it has usurped all the other precious metals. It obviously kicked all the cryptos to the curb, though they mostly did that to themselves. So a lot of green on the screen for silver, including since Uncle Mike infamously dumped all of his silver, and he is the longest running silver bull I know. It's up about 20-25% since then. So this run has been just nothing short of just brain melting out there, listeners. Just an absolutely astounding run for silver. 57.18 is where it was coming into the start of the show. Obviously, well north of the 40 handle that we were debating not too long ago. Well north of the 50 handle, threatening the 60 handle. Dan, this is madness, sir. Help us make sense of this just explosive rip in silver, sir.
Well, I don't know about making sense, but what I do find interesting about silver is I have to tell you, Mark, this is not unusual behavior. If you look at silver over a very long period
Are you
of
saying the
time,
Hunt brothers are back? Is that what you're saying if I read between the lines?
I'm saying that their ghost may still be around.
Is there like a Hunt brother grandson floating around out there or something?
Maybe, but now I think during Hunt Brothers it was around $35, if I remember correctly, where this is a bit higher than that. And what's interesting about it is silver can lead the way. So if you're going to trade gold, you always want to keep an eye on silver. It can have that kick in volatility. And that's what I mean by leading the way. And really, this, to me, started last Friday. And what it gave us was that move, that strong close going into the weekend. It made new highs. It closed above previous highs that we had, swing highs. And technically, that became an uptrend at that point. And we didn't see gold really respond that way. What we did see afterwards in silver is a little bit of follow through, the right amount of follow through. Like in my daily video, we talked about the idea that you don't want to go vertical. In other words, you don't want Friday to set the tone that we now start going, because that was what it really implied. That size of move, you don't want that kind of move immediately right after. Because when you go vertical in a market, it's very difficult to sustain it. It's a sprint at that point. And you want something not to go at 80-degree angle. You want something to go around 70 or 60. Those type of trends have a tendency to be sustainable. So we did get some follow through on Monday, but the action we've seen since then for the last 3 days have all been contained inside Monday's action. So it implies a couple things to me. One, the bias is still for a move to the upside. Two, it'll be interesting to see how we close going into the weekend. Last Friday, it was a market that gave us that confident close. Are we going to see that now? The last 2 days, we've seen selling coming into the market. So what we had was that spurt to the upside on Monday, a neutral day on Tuesday, and then on Wednesday, we cooled off a bit. And we're seeing some follow through today to the downside. So how do we close the week out? The other aspect that I think we want to keep in mind is right now this implies lower prices for silver. What's going to be important is how we finish. So we can break lower, but do we close with a positive close, which would imply, if we do, that's profit taking, and would also imply we're looking for further movement to the upside next week. So the structure that we finish here, I think with silver on Friday, can give us a lot of clues about our expectation for next week. So if we break lower and it bounces right back up, which means they're buying the break, then we look for follow through. That means next Monday, we look forward to make new highs, actually, ideally. So we want to see it above that 58.95 or so, a close above that, which again implies profit taking and the continuation of this uptrend. By the way, if we don't do that, I look for a sideways move more than a break to the downside. So I guess that's where I kind of see silver fitting in here.
Mr. Dan, while you were talking, our chat cracked the mystery, the riddle of silver, if you will, sir. It's Taylor Swift. She's buying it up. You know, she's mixed up with the Hunt's descendants now. Clearly, she is the new person cornering the market. So there you go. We just cracked the mystery here on the show, Mr. Dan.
That may be the answer.
It might make sense to some of this flow out here, listeners, because there is flow for days in silver. You know, normally silver, not the most action-packed of options assets, 25, 30,000 on a kind of normal, quiet week. Things get hot, 50, 60,000. We're already up to nearly 100,000, about 95,000 contracts on the tape. Obviously, more going to come latter half of the session and into tomorrow. So things are looking spicy out here in Silverland this week for obvious reasons. Looks like the lion's share of the action is going up. Well, lion's share, about 31%, going up in the Jan contract, which, by the way, Dan, I'm just not ready to say Jan expiration is 19 days away. That seems too soon. I'm not ready for 2025 to be over yet. But
I know, me too, Mark.
That seems way too soon for Jan to be less than 20 days away. But I digress, listeners. That's where 31% of the flow is going up in silver this week. So that's where we will hang our hat. The vol right now in Jan silver, 39.4, coming in aggressively, coming in 8.25 points. That's kind of wild. Obviously, that's helping to account for that metals C-vol annihilation we were talking about earlier. 8.25 points. That's a lot of juice coming off the top. Let's see if we can find out what's going on, listeners. The puts last week, 3.5% cheap. This week, 5.6% cheap. So maybe some more put sellers kicking in. The calls, though, getting more bid. 5.4% bid last week, 9.5% bid this week. So when you're rallying and the calls are getting more bid, that usually doesn't happen unless folks are buying premium to the upside. So kind of interesting to see the vol just getting annihilated out there. There is a lot of action on the Jan 60s this week. They've traded about 3,000 times. The big day was actually Monday, about 1,700. Looks like paper bailing on those. Looks like paper bailing on maybe a 60, 65 vertical. Closing on both of those about 1,700 times. So maybe paper had a little bit of upside and they're getting the heck out of Dodge. So that could be some of what crushed the vol, even though the skew was even more bid to the upside, which is kind of wild. But Dan, we're going to skip beyond January for a second because there's a trade here that just caught my eye. It kind of leaps off the chart. We're going past January all the way to February. Who can think that far into the futures, listener? That's a whopping 54 days to go in expiration. By the way, if you're wondering, Feb vol and silver, nearly a 38. That's off about 6 1/3 points. And the calls are super bid out there. There were 11.5% bid last week, 12.8% bid this week, and the puts 7.9% offered. So selling the puts, buying the calls is the skew setup in February, Dan. But what caught my eye was this. The Feb 80s, Dan. Yes, you heard that right. The Feb 80s flying off the tape this week. They are the most active contract by a country mile in silver this week, Dan. Going up over 6,000 times this week, trading half of that today, 3,000 today, and about 2,700 on Wednesday, Dan. So Feb 80s. I had to look in to see what the hell was going on. So while you were talking, I did just that. I found out, Dan, it is a vertical. It is the Feb 80-85 vertical, going up 6,000 times this week, roughly. For prices, if you're wondering, what is that vertical going for? About 12 cents. So it seems like it's a bit of a lottery ticket flyer, Mr. Dan out there. But still, those are some wild strikes. I mean, we were just saying not too long ago, Dan, that maybe 40 by December is a bit of a bridge too far. And now here we have 80-85 verticals, nearly over 2x that, over 2x that in silver. Absolutely wild. By the way, our producers just asked our audience, because this is just such a wild strike. They said 80-85 call spread in February in silver, 12 cents. Are you a buyer? Are you a seller? Are you just 80? What the hell? I thought we'd have an overwhelming vote for that third. It just went live, so this might change. But right now, damn, 2/3 want to sell that, even at only 12 cents. They're saying sold to you, and only a third want to buy it. Nobody's saying 80, what the heck, but I have a feeling that will change, Mr. Dan. Dan, what are your thoughts on that? Feb 80-85. Those strikes are just wild to me.
I would say, yeah, for 12 cents, not much, but yours. I mean, the issue with that to me is that you can always manage it. I mean, that's so far away. It's not like it's going to happen tomorrow. So it's not tight. It's not much, but there's time, I think, to manage that position for someone to exit if they wanted to. But I'd be more inclined to be that seller. So 12 cents yours, or mine, I should say. And very interesting. Boy, it does say something about attitude. And not so much a trade, I don't think, in the sense of where is silver going to be. It's more of a time decay trade, I think, because how quickly can it get to silver? I mean, to 80 cents. But Mark, when we think about it, this last move, this last leg in silver went from 48 to 58, 10 cents. And it took 1, 2, 3, 4, 5, 6 days to do that. Now, it's hard for me to imagine silver at $80, but the fact is, silver can have that volatility, as we talked about. So it's totally out of the question. Not really, between now and February. The drivers behind that fundamentally, hard for me to imagine. It would take a lot of uncertainty, because silver is that market that needs an excuse. It's not a supply-demand situation that we're facing right now. So it's perception. And that's what I find so interesting about the precious metals. Those primarily are excuse markets, not a supply-demand, although they can be. But right now, we don't see that. So it's, and it has a bullish bias. Very interesting.
I think what we've all learned, Dan, is that we step in front of Taylor Swift and her Swifties at our peril. So 80,
I think you're right.
80-85, here we come. I mean, you're right. It's sold all day, but at the same time, 12 cents doesn't excite me either. But yeah, just absolutely wild strikes, Mr. Dan. Since we're talking precious metals, we should probably talk the king of the complex, which is gold. You know what, Dan? Silver is stealing a march on gold, not just in net performance. stealing the number one spot by a significant margin, well past gold, well past palladium and platinum, but also stealing a march on it in terms of volume. Gold kind of below its average right now for the week. Kind of a sleepy week, only 171,000 contracts on the tape. We usually expect north of 200, 225, maybe 250 this time of the week. So gold kind of sleepy. Gold 42.38 right now, off about almost 16 handles on the week. A little more than that if you go back to our last show a few weeks ago out here, listeners. And about 25% of that light flow going up once again in the Feb cycle. So nobody's playing in Jan. Everyone's going out to February, about 54 days out here. Dan, what are your thoughts on the king of the shiny stuff and potentially looking a little sleepy next to little brother silver right now?
Agree. The structure in gold, the rally that we saw when silver was taking off, isn't as robust. Near term, it technically isn't an uptrend. It still maintains that. The current action this week is what I call a neutral zone trade. It rallied, or I used to call it the broker's deck, because you remember, Mark, you get to a certain price level and you see selling paper coming in. And then you break lower, and then you get to a price level and you see buying paper coming in. So it tells us where those orders are in the broker's deck. That's why I used to call it that. Here, you and I can look at a candle chart, and the way you see that type of behavior is today, so far, we broke to the downside, and right where we found buyers 2 days ago, we found them again as the market rallied. Yesterday, we rallied, and it also backed off. It left that shadow on the highs. So we have a shadow on the highs for yesterday, a shadow on the lows for today. We're inside what I call a benchmark candle. So it's a neutral zone trade, which implies a sideways market, which is what I'm looking for tomorrow. And but it's got a bullish bias. So it's an interesting structure, I think, just from a price point of view. But it doesn't imply that it's done. That's the other thing. If we think about what's surrounding gold, well, what's interesting about it, I think, is the central banks. You know, they buy about 1,000 metric tons of gold a month. That's what we've seen. And if you look at the central banks, they have purchased 28% more gold this month than they did last month. The biggest buyer was Kazakhstan, which is surprising, but a lot of developing economies are buying gold. And you think about it, well, what the hell? You know, I remember being at in Frankfurt to teach a class at some German banks, and I had an afternoon free, and I went over to the Bundesbank to see a fellow who attended a class many years ago, but he was an analyst. And with him and a colleague, we went to lunch. And this is a number of years ago. And I said, you know, how much gold does the central bank need? Nobody uses gold to back a currency. The last country to do that was the Swiss, and that was 1999. The Swiss stopped backing their currency with gold. So is it a psychological thing? Is that what you need gold for? Just so people know there's something that theoretically has a store of value? All right. Well, then how much? How much of your reserves should be held in gold to give that comfort, that psychological comfort? I mean, nobody knows the answer, and we sure didn't come up with any conclusion. But it's just the aspect of where does gold fit in. I think another thing that you and I should be sensitive to is where it fits in for the dollar. And by that, I mean the de-dollarization efforts that are being made out there. We look at the BRIC countries, we look at countries that are saying, doggone it, we don't want to use the US dollar. I mean, you touch that thing and, it can be grabbed. We have $300 billion of Russian dollars. And Russia says, I don't want to use the dollar. And China says, I'm not too thrilled about it either. So there are a number of countries that want to get outside of the dollar. But the dollar is 90% of international transactions are dollar based. 80% of reserves in banks globally are dollars. But gold, that is increasing. You got the U.S. If you look at holders of gold, you got the United States, you have Russia, Italy is number 3, for example. And so, what's the deal with that? Here's where it may come into play. I'm Russia, you're China, we make a deal for a commodity. Maybe it's crude oil. And most commodities, as you and I know from these futures that we look at, are based in US dollars. Now, we don't want to use the US dollar. Typically, if I take my rubles or you take your yuan, you convert it to dollars, then dollars get converted to rubles. And that's how we get it. There's not usually a strong yuan ruble cross. Okay, well, how about this? I'm going to sell you crude oil, and we know the dollar amount based on our transaction. But instead of using dollars, how about if we use gold? How about if I give you the equivalent value in dollars? That's how you pay me. Or you give me a credit in gold or some other form that we can make that transaction and not use the dollar equivalent because we kind of need to. That is the basis, but we don't use the dollar. That, I think, long term can have a foundation to gold. The other thing it takes away for gold, what is gold like? It likes uncertainty. It likes high inflation. It likes conflict. Well, do we have that? Yes, to an extent. It likes a weaker dollar. Because when money comes out of the currency market, it goes someplace. When money comes out of the stock market, it goes someplace. Interest rates, precious metals. So it's positioned economically in our larger point of view, the macro point of view. I think it's really interesting. So it's not super bearish here. It does imply that neutral zone trade that I was talking about. And one last thought, how we were talking about silver, how it finishes this week out. Well, how does gold finish this week out? A very positive close for gold would be a close above 4,300. And we have it, they bought the break today. So the issue is, do we get follow through? A clean follow through would be a close above 4,300. If we get that, don't look for a big move on Monday. Look for a smaller move, but for the bias to be maintained. So I guess that'd be the way I would look at gold. That was a hell of a long answer.
our audience, they're waiting for the big adios, Dan. You haven't given one yet. So
We don't have.
They're getting a little antsy. I don't want to put one in your mouth. I don't want to force you. It's got to be an organic big adios. But so far, you haven't given a big adios to anything. So
we don't have one here.
I thought it's in your contract. Whenever you come on, you got to give a big adios to something. Yeah. All right, I'll talk a little gold. You see what you mull over, what you don't like, as we keep on rolling here. Like, what is going on in gold? Like I said, kind of a light week volume-wise out here. But once again, the action mostly focused around February. So that seems to be the new December. Usually the metals love December, love a little bit longer-term contract. Obviously, December no longer really in the offing for a longer-term paper, so they're going a little bit farther out. They're going to, in this case, February, listeners, nearly 60 days out, about 54 days. What is the vol in Feb gold? Might be asking. Almost a 19 even, off about 1 3/4 points. So again, kind of going back to that Volmageddon we were talking about over the last week on the C-vol part. They're coming for gold vol this week as well. Skew-wise, nothing really to write home about here, at least compared to historical in gold. The puts 2.5% offered last week. This week about 4.2% cheap. So puts getting a little bit cheaper. The calls 4.4% bid last week. This week 5.1% bid. Looking at historical levels for gold skew, that is not much really in either direction. If you go a little bit farther out, if you go out to, let's say, Q3 of next year, now you're starting to see about a 8% bid to the calls. So not quite double, but close to it. And even that historically isn't that much for gold. A same level of discount to the puts, though, about 4.1, 4.2% discount to the puts. So interesting stuff. I guess kind of a reflection of these lofty levels we're at right now. It's just hard to manifest these aggressive bids to the upside in the metals these days, particularly when it comes to gold, which has seen a little bit of pullback since we last talked about it. Once again, though, listeners, it is the 4500s that is lighting up our tape out here this week, going out to February, Feb 4500s. Again, you know it's a light week when you could take the top spot with just about 5,000 contracts. That isn't much, but that gets you to the top spot in gold this week. The hot day was actually Monday, listeners. We have 2,000 of those going up on Monday, which actually, if you do a little bit of digging, which I did, listeners, you can see that it actually looks like it was a bit of a call vertical. The 4,500, 4,600 call vertical going up on Monday. Looks like a bit of a ratio, about 2,000 by about 1,100 times going up. But it traded for decent size on Monday, opening on the 4,500s, potentially closing on the 46, or maybe we have a bit of a roll down. Either way, it looks like they did it for about $20 even. So you like that vertical / roll for $20, listeners? Looks like somebody did it out there. Again, you got a little bit of time out there, and you're buying, if you are rolling, buying a little bit, I put in air quotes, a little bit more relevant strike. But in past his prologue, gold didn't hang out above 4,500 very long. We saw it also going up, looks like about 2,000 times on Tuesday, but this time looks like it was just the 4,500. So either way, the 4,500s have been pretty active this week. The 4,600 vertical leg looks like it only traded on Monday. So either way, are you down for a little bit of Feb 4,500? Seems like somebody was this week. 600 trading yesterday, about 400 today. The OI is about 5,000, so that was all pretty much opening paper this week, which is also kind of interesting. Worth noting is about 4,000 still open on the 4,600s as well. So if they were rolling, they have a lot more to do. So kind of interesting. Outside of that, not a ton of paper really catching my eye. We've already been going deep on the metals, Dan. We're already kind of coming up against it. We probably have time for one more complex. What is catching your eye, Mr. Dan? Where should we sink our teeth next, sir?
Gosh, there's so many interesting things going on. The crude oil market's interesting. Nat gas is interesting. Equities, not looking at, we guess should look at the equity markets. Currencies, U.S. dollar's been weaker.
You got to pick one, sir. You hit me with a lot of good ones. You got to pick one. Where do you want to go?
Gosh, I wonder where the audience wants to go. How about, you want to look at nat gas?
All right. To energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the explosive world of energy we go. Pop out of that metals in the asset class list, you're going to go up to 3 from the top to energy. Then in product family, you're going to go down 3 from the top to nat gas. Man, Dan, I know we're in winter, but it's been a little while since we've seen a 5 handle in nat gas, sir. That just seems odd to me. Does that seem odd to you?
No.
Oh, okay.
No.
There you go. So you give him that not just a big adios, you give him that the big buy. You want more.
Yeah, sorry. That's not an adios either.
Our chat will be disappointed.
I would say this. If we trade below 488, that would be an adios. That'd be a big adios, because today we're getting what I call a false sense of security. You do not want to see new lows in that gas, because that would be a big adios. What you're looking for now is unchanged to higher. You want to see a positive close going into the weekend. Nat gas is fascinating because its evolution as a product. 4 years ago, is that right? Yeah. How long? Yeah, Russia invaded Ukraine 4 years ago. So 4 years ago, people said, we should be taking our nat gas. We're getting more of it, and we should be sending it to Europe. They were paying 4 or 5 times higher than we were. Well, we didn't have export facilities to any great extent. Germany didn't have any import facilities because everything was coming to them by pipeline from Russia, which is the same boat that Hungary is still in. So, what has changed? We have built export facilities. We are the world's largest exporter of LNG, which is just very cold, highly compressed nat gas that becomes a liquid. Largest exporter of that. And a few years ago, we could barely do that. So we've seen a change there. We've seen a change of our ability to send it around the world. We've also seen a change in our production. We are, the world's largest exporter of that product. And when you think about Qatar and other countries, you think of them being the number one. But somehow we're at that spot. The U.S. marketplace responded to that global demand, and we increased our production to meet that. So that I feel very bullish on, because I don't see that changing anytime soon, that relationship that we see there. So it's an interesting market. Now, it is a bit cold, right, Mark? I mean, we're a bit chilly today in Chicago.
It's a wee bit Chilean here in Chi-Town, yes.
Okay. And so we use a third of nat gas to heat our homes, cook our food, especially where we live. If you go to northeast part of our country, they still use some heating oil for heating their homes. But here, we use a lot of nat gas. We use another third of nat gas to produce electricity. It burns 60% cleaner than coal, and it was cheaper in various parts of our country than coal, although coal does have an edge in some parts of the country, and they still produce electricity that way. But majority is nat gas. And then we use another third in high industrial consumption industries like steel making or the chemical industry. They use a hell of a lot of nat gas. So those are the major consuming parts of nat gas in our country. And we do have colder temperatures over the last few days, and the expectation is that trend's going to continue. So right now, we are seeing buyers coming into this market, and it looks like it wants to continue. So how it behaves again on Friday, what this structure implies It could be an inside day. If it is an inside, meaning Friday trades inside the range of Thursday. If it is, then Monday becomes really important. And you do not want to go below 488. That right now is that bottom that we want to see hold over the next 2 to 3 days. And that would be a big adios. But right now, I'm looking for follow through. I'm looking for a market that wants to close positively. I mean, $5. I agree with you, Mark. Here we are, $5. You know, about 10, 15 years ago, the expectation on nat gas it is that it would be trading at $20, and it was trading at 12 at the time, and the expectation was 20. What changed it was horizontal drilling. That was the game changer, and we're still feeling that technology change. So I think our production capabilities are going to continue to increase. We got global demand in ways that we have not had before. We're seeing Europe trying to shift away. Europe has come back and said, you know something, by the end of 26, we're not going to be using any Russian nat gas because they still have some dependency there. So we'll see how that works out. Like I mentioned, Hungary, they're in a tight spot because they really don't have alternate transportation capability for nat gas coming from Russia. So it's an interesting market. We're seeing a shift in global demand, which I think is interesting. We got supply increasing, and so we got that economic relationship that I think could drive this market. So I'm bullish on it.
Oh, well, it's like some flow out here. Might be backing you up, Mr. Dan. A hot week out here in nat gas. So a 5-handle, not spooking a lot of people. Over 1 million contracts already on the tape, listeners, in nat gas land. So nat gas roaring back to life, underlying wise and options volume wise. Once again, we're going out to next year. We're going out to January this time. That's about 22 days to go in nat gas Jan expiration, listeners. Hanging out at a 5.06 to be precise. Well, let's see. The vol also coming back to earth a little bit in nat gas as well. 61 1/3, off about 3 3/4 points. So not a vol annihilation by any means, but again, keeping up with that trend we saw on the C-vol of vol getting kind of smacked across the board this week. Skew-wise, the calls last week were 9% bid, and guess what? They're still 9% bid. They haven't budged. The puts last week, 6.2% cheap. This week, 6.5. So we have skew remaining eerily static over the past week, which is kind of interesting. But Dan, that's not stopping folks from trading the heck out of this skew, especially out here in January. We have two kind of diametrically opposed prints. I'm curious which one you prefer. We have almost a tie for the top spot. We're hanging out almost exactly at the 5-handle, listeners, in the futures. We've got the 4 puts taking the top spot just ever so slightly with 43,000 contracts this week. Looks like the big day was Tuesday, nearly 19,000 going up. Looks like mostly closing there, so some folks could have been bailing on these puts, even though the skew remains, for the most part, pretty much unchanged, slightly lower. And then we have 12,000 on Wednesday, 10,000 on Monday, only 1,600 today. By the way, those puts going up this week for an average price of around 4 cents. At least that's what they're going up for today. And then right behind it, number 2, we have the 6 calls, Dan. And these were going up opening all week long. Looks like the big day for those, kind of a tie between Monday and Tuesday, both about 12 to 13,000 each. 9,000 on Wednesday, 7,200 today against an OI of about 42,000. So it seems like folks are selling those puts and buying the call, maybe doing that risk reversal, in which case you're doing it for about 4 cents. But if you could buy that strangle if you want to, Dan. It's only going to cost you about 12 cents. But I guess it sounds like from your spiel there at the top that if you had the gun to your head, if you had to pick one of those, sounds like you're picking the 6 calls in Jan for about 8 cents, Dan?
Yes. Yes, although it seems like such a long ways away. But, you know, we've been there before. Like I said, we got up to almost $13 in the past. So this is not uncharted territory. And we're in a time right now where the expectation is in the United States that we're going to have a colder winter than we've had in the past. So that demand may be there. And again, we're seeing that global demand out there. So, yes, Mark, if I had to pick one, I'd pick that 6.
Just go crazy. Buy the strangle for 12 cents. Why not? 4 more cents, Dan. What's 4 cents amongst friends?
There you go. Well, you've got a good point there. Isn't it interesting, Mark, to see the attitude, though? I mean, it's logical in terms of those puts and these calls. I think that relationship overall. But, wow, it's interesting. And the skew didn't change much. And you would think with this rally, we'd see an adjustment there.
Yeah, you think with the rally, folks may be bailing on the puts and buying the calls. You think that skew would tweak a little bit, but it's literally unched on the week. So kind of interesting stuff. And you are right, Dan. I think we've already had more snow in Chicago than we had all of last winter. So people think of Chicago as this barren, frozen wasteland, but most years we don't get a ton of snow. This year might be the exception, so maybe that's feeding into these nat gas prices. Which way would you rather go on that, listeners? 6 puts for 8 cents, 4 puts for about 4 cents. Are you going to buy the whole strangle for 12 cents, or are you going to go crazy and sell it for 12 cents? Hit us up. Maybe might be a fun little flash poll or question of the week there as well. And Dan, that music means we're out of time, man. So much going on. We only really had time for 2 complexes, but they were 2 meaty complexes this week, Mr. Dan. In the meantime, if folks want to go check out all of your cool vidges on a whole bunch more products, where should they go? What should they do?
Well, they could visit dangramza.com, and there you'll see 22 different markets that I look at. There's a free video that I extract markets that seem to be highlighted that day, and you can go back over 10 years and see what was I saying, what was I showing over that period of time. You'll see green lines which represent a buy level, red lines which represent a sell level. And again, if you go back and look at previous recordings, you'll see how those lines change over time. Not buy and sell recommendations, but just want to share what I'm looking at and how I see these markets unfolding. So if you haven't looked at futures, one thing you want to do is just watch them, see how they unfold. And this could be a tool that you could use to do that. And what you do, Mark, I think is really important if someone's trying to understand this marketplace. So that could be a reference to take a look at.
Listeners, if you're upset you didn't get a big adios, I will guarantee, if you go to Dan's videos, he'll give one in at least one of those markets that he covers. That's my personal guarantee to you. One big adios a day. That could be your new newsletter, the Big Adios newsletter, Dan, and you just figure out what you're giving the big. I would subscribe to that. Why not? Check him out, listeners. Dan Gramza, Gramza.com. If you're not checking that out and you like these markets, what are you doing? By the way, Dan, we have an update here on our silver vertical poll, the Fab 8085 vertical. Right now, coming into the end of the show, 40% of our audience want to sell it. So they think 12 cents. They want to pocket that 12 cents. 30% want to buy it, and 30%, these are the votes I was expecting. They're saying 80. What the heck? So I'm color me in that camp. 80 handle in silver sounds wild. 5-6 handle in nat gas sounds kind of crazy. But here we are nonetheless, listeners. So get over there at Options and make your voice heard. And of course, while you're going places online, make sure you check out cmegroup.com/TWIFO, TWIFO. The place to go to kick the tires and light the fires. That's going to do it for us on TWIFO. Not going to do it for the network, though. Back in about an hour to break down all the day's activity. Looks like we got another interesting one on our hands. We're red, we're green, we're red, we're green. All kinds of stuff going on in the equity space. What's lighting up the options market? Well, you got to tune in to the Hot Options Report every day to find out. Back again tomorrow with Dr. Vix and other sundry and varied guests in hand to talk the week that was, and indeed still is from a vol perspective. Then we're back one final time exclusively for our pro friends to talk some weird and wild paper on options oddities. Man, there's been some good stuff in there of late. Check it out, theoptionsinsider.com/pro. to get your hands on that. Then we're back again next week, all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.